Happy wife, happy life. Exactly, man. Hello, everybody. Welcome in. I am Sweet Bobby, the world's worst trader, but I ain't as bad as I used to be. How about that? So, even though I'm the world's worst trader, we're doing okay. Everything is fine. We are down 1.07% in the market. Now, those of you that are holding these 111 and 112 positions, you're like, oh my gosh, the pain is too much. Yeah, I mean, sometimes you got to hold these things, y'all, and you're just going to have to suffer with some paper losses. And you've got to decide, can you do that? Because it's not easy. Now, looking back on it, once you get out of it and you go, oh man, is that all that happened? And I recovered and I was fine. But it's tough. I mean, it's tough to sit here and go, well, I'm seeing my count down. But imagine if you were just holding the S&P 500, if you were just holding SPY, you would be hurting as well, right? You would still be, oh no, what was me? So, I guess that there's having company and pain makes you feel a little bit better, right? What's the saying? Misery loves company. That's it. Misery loves company. So VIX is up to 20. Volume is about average, maybe a little bit over average, 5,900, almost 6,000 contracts every 2 minutes. And as you can see, AD went up, made a high of the day, and now we have continuously been going lower, and the market has fallen with it. So here's the overnight low. So we have broken out past the overnight lows, and we're even taking those out. So Boo, the cat here, is definitely excited about the market today. Boo has traded his own account, and he's doing fine. All right, so let's see what the big green monster looks like. See if we think that we're going to go down more or we're going to stop. Well, it doesn't really say, does it? Now, remember, we drew the probability cone, and y'all, if we take out this 42.13, which based on the position of AD, it looks like we might, unless we have a reversal, then be looking down at 41.70 as our next target. Now, how does that move into what our positions are? Well, let's go and look really quickly. Let's go to our positions, the monitor tab, and let's look at our groups, and let's see where our naked puts are, right? So here's our naked puts, and let's see where we're at here. Naked puts. Let's look at the option delta. Remember, if these things get to a 30 delta, then we have a prerogative, but not a requirement to roll them. We have the option to roll them. So we're at a 27 delta now. So those are our closest ones. We've got some at 5 delta. We've got some at 8 delta, 25, 26, and 27. So those are at 4,100. Okay, so let's go back to our chart and let's look at the 4,100 and see where we're at there. So we are at the 4,100. We are right down here. So is it a possibility that we make the 4,100? Well, I guess it could be. Let's try to draw where that line is. 4,100 right in here. Right, is our 4,100. So is it a possibility that we go down to the 4,100? Yeah, it's a possibility. But I kind of like those odds. I think we'll have resistance here. This will be an oversold category, and then we should pop back up into here. But if we continue to go down, y'all, this is a fair value zone. Well, this is would be an overbought zone. I'd have to redraw but we've only got 6 more days on this one before we redraw it. So look for a little bit of support at 4170. 4170 being where support is. Let's see if we have extended the expected move for the week yet. No, not yet. So you see the expected move is all the way down here to the 4141, and we've not gone beyond the expected move. So even though we've had some volatility, we've had some big moves this week, nothing that looks out of the ordinary at all. So again, you have to do an assessment. And the assessment is, can I do this style of trading knowing that when there is a grind down market that I'm going to experience a little bit of paper losses? You've got to figure out if you can do that or not. Are you resilient enough to hold on to your positions and to not lose it? Because it's hard seeing the net lit go down, I'll admit. It is for me as well. But you look back and most times, everything's going to be okay. So let's go into our positions today. Let's see how far down we are today. We are at the 25th. Boo the cat is doing fine. So let's see. We're doing them out of order normally. So this one, let's see how far we're down on the net lick. Crimson 203. I'm the only one that shows you that when we're down, I think, out there. So we're at 23,392, 23,392. So that's a pretty big hit, y'all. 23,392, 23,392. All right, 23,392. Let's do our Gregson ratios. Gregson ratios are, again, positions are safe, but the net lick does suffer a little bit. So let's go over here and let's see what we got. We've got 154.57. 154.57. Now, what we might do is we might do something like a Victor's hedge on demand. Let's look at that today. And the VIX is at 20. Oh, wow. So our theta looks really nice. Theta looks nice. Let's see what our buying power requirement is. Our buying power is 19,150. 19,150. Beautiful. So let's see if we can pull up and see what hedge on demand is. Is Victor here? I may need Victor's help in doing this. It's in my trading plan, but it's not something that I normally do. And the thing is, I can borrow from my theta to put on a negative theta type trade, right? That might give me a little bit of negative deltas as well, because we're using 81% of our buying power now. So let's see what our trading plan says about the hedge on demand. Oh, I'm working on my book. Oh. If you ever write a book, let's see how many pages we got in this thing. This page has, my whole book has word count of 68,188 words. It's 178 pages. It will be available for your high school seniors and college age students. It's got houses, assets. Look at this. And it's done in it's done. Madison's hand shot up. Dr. Gaines, I'm worried unexpected expenses could totally wreck a carefully planned budget. What do you do when surprises pop up? I nodded understandingly. So that's coming. So let's see. Graduate Millionaire book. Oh my goodness, where's my trading plans? Trading plan. Here it is. This is my last one updated trading plan. So let's see what this hedge on demand looks like. Because I did write it in here. Optional hedging. Hedge on demand. Here's Victor's hedge on demand. During times of market turbulence, is it market turbulence? I don't know. Maybe a little bit. We're on the verge of World War III. Boo is sensing trouble in the market. As you say, waved everybody boo. Boo's waving. So you buy an out of the money ES put debit spread nearest to 60 days to expiration. Okay. So the cost of insurance is equal to approximately 1% of the account's net liquidation value. So for a $50,000 account, look to buy a PDS for $500. Okay, so this particular account is like a $25,000 account, $23,000 account. So that would be a $250 put debit spread, right? So the width of the spread should be approximately half the cost of the PDS. So for a $500 put debit spread, look for a 250 wide put point spread. For a 200 put debit spread, look for a 100 wide put debit spread. So in this case, we're looking for a $250 to spend on this thing. So we're looking at it to be what, 125 point spread. Okay, so delta, the long put of the put debit spread will be placed at approximately the 9 delta. Okay, and then we got the management in there, but we don't need to worry about management now. So I can spend $250 on this particular spread, or 240, whatever, and it's 125 wide. So let's go in and look and see what a hedge on demand looks like. So we'll go to trade, we'll go to ES. Here we are. And Victor said closest to 60 days. So we got 51 and we've got 65. So we'll go 65. Okay. And he said go to a 9 delta. So let's go to a 9 delta. And I liked it so much that I've got it written in here. And we said 125 wide, right? So 125 would be buying the 3,700. And we would do the 35.75. Y'all check my math. I'm bad at math in my head. Okay. So that would be $6, $5.75, which would be $291, a little more than what we would kind of like to pay for that. So why don't we adjust those down just a little bit? Let's go down to the 36.75 and the 35.50. That's 125 wide, right? And that one's going to cost us, yeah, that's more like it. Let's go down one more. Instead of the 36.75, let's go down to the 36.50. And we'll go down to the 35.50 to the 35.25. Now, that's about right. There we go. 250 plus my commissions. That looks like it's right. So anybody got a question about this at all? I'm putting on a little bit of a hedge. I guess we could analyze the hedge so everybody can see it first. See what the hedge looks like. So analyze this particular trade. Let's see, make sure that's the only thing we got in there. And it should be. Yep. So let's look at this. See what she looks like. And zoom out a little bit to the hedge on demand. So this little hedge on demand looks really good, right? If we get a 10% move down, you start making some good money here. And it's got a negative delta, which our account needs, right? It's got a little bit of negative theta. So our theta is okay. We can borrow from our theta a little bit. It's a positive Vega trade and taking up no buying power whatsoever, which is really good. And it gives us a maximum, ladies and gentlemen, profit of $6,000 if we were to continue to the downside. All right, so let's do the hedge on demand. Let's do this. Let's see if we can put this on, confirm and send and send. Chime on, little baby. Might make us go up to 5. Let's see, cancel replace. Let's go up to 5 and hopefully we'll get filled. And we are done. Hedge on demand is in place. Yeah, the cumulative hedge is 1% of your net lick. So then let's go in and let's evaluate what the management is on this. So what we're looking to do, y'all, is this. Once the market is stabilized, well, has the market stabilized? I don't think so. It just continually seems like it's going down, right? The put debit spread can be removed when it reaches approximately a 25% loss. So if I spent what I spent for this, $250 for this, I can't do math in my head. So $250 is what I spent for it. So if this thing turns out to be a 25% loss, which means I'm going to have a loss on it of about $62, you know, you could take it off. That means that the market has reversed, the market's gone up. You can say, well, screw it. I don't need the hedge anymore. If the market continues to fall, the put debit spread can be either removed for a profit of approximately 600%, wow, or allowed to remain to provide additional protection. So what's 600%? 600% of 250,000 is what? 6 times 250 is what, a $1,500 profit? Did I do that math right? I think I did. So that's the hedge on demand, ladies and gentlemen. Let's look at it in the other account. Let's go to the Tasty account. We might do one in there as well, and we'll model it out over here as well. So let's say this one here, let's say we're going to put one over here. So let's clear this trade out. And we'll look at it over here. So make sure I do it right again. Go to the table. We're going to go closest to 60 days. Hedge on demand. Right? We said go down to the 9 delta. I can't remember where we went to. We went down to lower than that, didn't we? We went down to, what? How come we got any?
Hey, Bobby.
Yeah.
So Tasty's having an outage right now, so nobody's platform is working.
Yeah, look at this. Nothing's moving at all, y'all. Okay, now it may have moved a little bit. So Tasty's platform is down. Wow. Okay, well, nothing to see there. Hey, I appreciate you sharing that with me. So that's the hedge on demand, y'all. Any questions? And in a time like this where you're kind of scared, it's kind of nice to go, well, for $250, I can pay $250 to get me a really nice $6,000 hedge. And I've got that for 60 days. Okay. Great session, y'all. Hedge away if you continue to believe that the market's going down, which I do. I believe we are in a bearish market. We may have some, some up days along the way, but right now, the price is below the 200-day moving average. It's below the weekly on the 10 and 20 exponential moving averages. It's below the 10-month moving average. We are in a bearish time. Doesn't say that we're in a total bear market, but over the next 30 days or so, my outlook is definitely bearish on the market until those fundamental or those technical indicators change. Hope you have a wonderful day. I will see everybody tomorrow.